Hello traders, this is Mac Billion. Today is May 2nd, 2017, and let's talk about the market. So I'm going to talk about the three benchmarks, the Spider, the Dow Jones, and the iShares Russells. Let's start with the Spider. As you can see here, we break out this major resistance and we just moving sideways about the 5 simple moving average and about the 21 double exponential, which is my momentum um, moving average. And you can see here there is no volume yet, but as soon as we break out this little range right here about 239, there is a resistance at 240.65, and DMI is bullish and is now very strong. So there is high probability that we continue break out this level and continue to 245. So let's see what happens. Now let me show you the Dow Jones. The Dow Jones is bullish, as you can see here. This chart is doing the same. It break out this triangle wedge and it's moving sideways. DMI is bullish, no volume yet, but I think it's gonna go up to 210, 211, and then we'll see there if the bulls wanted to break out the 210 level. So to me, right here, this is bullish. It's just moving sideways, waiting for some momentum. And for the other one that I wanted to talk about is the iShares Russell. It also break out the Fibonacci 139. It tests the 142, but it looks like it fails, and now it's testing the 139 breakout point again. I think it's bullish. It might go down to this major support on trend line, but DMI is bullish and is strong. So I think it's just moving sideways here for 2 days, and then it's gonna continue up to the next level will be 145. Now let's talk about this one. This one was my darling. I was following the stock. The chart looks really bullish. You can see this chart making higher highs. It was just consolidating here, and I say 16 or 18. I was wrong. It break down horrible, and it tests the 1055 like butter, and it break down the level too. So now that I look at the chart, there was a signal that I missed. So before earnings, price didn't test the 14 level. So that was a signal that it was weakness. Somebody knew something. They don't want it to buy here and get it to the resistance. It was just hanging in there. So that was a signal that I should see that the stock was going to break down. Because usually when a stock is strong, they usually go to resistance and wait for the report there. But didn't happen here. It just went bounced from this level of support, but it never made it to the resistance right here. So that was a signal that I should see that it was gonna go down. So it doesn't matter how good you are reading charts. You always gonna have losers, and I'll always get losers. About 20 to 30% when I'm doing really bad. So that's what you have to keep them down and do. You have to get more winners than losers, but you always gonna get winners. So the lesson here is you always have to use money management. If you allocate the same amount of money, let's say 2 to 5% on each trade, you're never gonna burn your account. It doesn't matter how good this trade looks. You never put a lot of money in any trade. It doesn't matter how good it looks on the chart, on the fundamentals. You always put the same amount of money, and you always keep your account in check so you can trade next day. So to me here is broken as hell. It's broken as hell. I think it's gonna go to 944, which is support now. And if that one doesn't hold, it's gonna go to $7 to $8 or probably 650. For now, it's broken. It's broken. There's a lot of people saying, "Oh, I'm gonna enter here." Never enter on a breakdown like this. Usually those people that trade like that, buying dip dips, they never make money. They can make money one day, but the rest of the trades they lose a lot of money. So it's better to wait until you see consolidation, a move, a breakout, but never enter a trade like this. Never. This is a no-no. Now let's talk about Apple. Apple report today, and you can see here it went after hours nicely to 148, which it was my target, and it break down. So the lowest it went down, it was 143.82, but it bounced a little bit here, and I think it's gonna go to 142.64. This is the major support. Then there is a trend line support. Let me show you the trend line support. Apple is not a big mover anymore. It was, if you remember Apple, Apple was a big mover a couple years ago. You can trade earnings very nicely, but not anymore. So you can see here it went nicely to 148, but now I think it's gonna test this support or the Fibonacci 142. So let's see what what the bulls wants to do there. They wanted to keep going up or they're gonna break down. Now let's talk about another one. Let's talk about Facebook. Facebook, as I said, went to the top. This is a major multi-year channel, and it went right to the top of the channel. So I think it report after hours. I didn't follow because I took my premium and my profits out, so I didn't follow to see. In Apple, I got puts before the market closed, so I don't know how they're gonna open. So you see the report didn't do much. It just went up a little bit. So it's just flat. So if people trade the report with straddles or triangle, they're gonna be losing a lot of money. So the VIX is a fair indicator, and you can see it's almost at the lowest levels and it's pointing down, meaning there's no fear. This is another thing that I use to trade. Usually when it's at the lowest levels, you can enter long trades. But if you see that it's spiking, it's moving up, it's pointing up, it's a signal that the market is gonna break down or is moving down slowly. So this one is pointing down and it's at the lowest level or near the lowest level. So I think it's good to get long in here. Its market is still bullish. Don't believe anybody that says that the market is bearish. It's bullish. Of course, you're gonna get breakdowns. You're gonna get stocks that move down, but the game here is to go long as soon as the market, like in the spider, goes to 240. Then you have to see what's gonna happen. You have to watch volume. Okay, traders, check out McBillion. Join McBillion. You can learn with me. You can trade with me. Check it out. This is everything for today.